Hi everybody, thanks for coming to my channel today. I sure appreciate you coming aboard and watching my channel. Hopefully I can help you out. Today, as far as what we're going to be talking about, is our mortgage rate buy down programs that are out there. Now there's two major programs that are out there. The first one is called a temporary buy down. The second one is called a long-term buy down. We're going to work on temporary buy downs today and do the other one in another video. So temporary buy downs is basically what you're doing is you're paying the years of interest up front based off the buy down, and it's going to be giving you a lower payment. Okay, so you're paying the years up front in exchange for a lower payment. And this is a short term, so you're lowering the rates, and how you're doing this is you're lowering the rates for the first years. So we're going to do an example here. We have, there's several that's available, but three of the most popular are a 3-2-1 buy down. That means the rate is going to start 3% below the note rate for the first year, and then go 2% below the note rate the second year, and then up to 1% below the note rate the third year, and then go to the note rate on the fourth year. There's a 2-1 buy down that just basically means for the first year it's going to start 2% below the note rate. Then the second year is going to go 1% below the note rate, and the third year is going to go right to the note rate. And a 1-0 means it's just going to start 1% below the note rate the first year, and then go straight to the note rate. Okay? So in our example today, we're going to use a $200,000 loan for 30 years. The rate's 6%, and the note rate based off of that is going to be at like I said, note rate is going to be at 6%. The payment based off of that is going to be $1,199. So on a 3-2-1 buy down, the first year your rate's going to be at 3% and the payment's going to be $844. The second year it'll move up to 4% and your payment will be $954. The third year it'll go to 5% and your payment will be $1,073. Okay? And then the fourth year it'll go up to the full 6% rate, and then it'll be $1,199 for the rest of the term of the loan. Okay? Now, the cost to do this is, like I said, you're paying all the interest up front in order to afford a lower payment. So the interest charges up front that you'll be saving is $8,712. So that money is due at closing. Now, who pays for this? Okay? Now, usually in a market that, especially like right now, where it's kind of a buyer's market, not a seller's market, the sellers are willing to contribute to the buyer's cost. So typically, the seller is now willing to pay for something like that if you write it up correctly in your purchase agreement. Now, you may request it as part of your concessions. So seller's concessions are the seller is willing to pay for a chunk of your closing costs so that you can afford to buy their house, okay, rather than lower their payment. The benefits to you is that it'll give you a lower payment while you're starting off. So assume that you just buy and you're moving to a new neighborhood or a new area, and you're getting to the neighborhood and you don't have the funds to pay for all the curtains and things like that you want in your house. So the seller offers this money to you so you get a lower payment so that you can have more money in your monthly pocket to afford all the things that come for the first year or so. Let's say, for example, you are expecting with a child, and the mother's going to be out for the first year, okay? Well, that will lower their payment. If you can get a payment of $844 versus $1,199, that'll really help out around the house. Let's say you're waiting for interest rates to go down, which is really popular right now. The Federal Reserve, as you know, in the course of the last year has raised rates over 3.5%. So what used to be a 3% rate is now 6.5%. Well, it's expected that the Federal Reserve will lower rates again in the next couple of years when inflation gets under control. So therefore, this little temporary buy down helps lower the payment and ease the burden on you while you're waiting for rates to come down. And then when rates come down in a couple of years, you refinance your house. Okay? And then another great thing is, let's say you're waiting for a pay increase. So let's say you take a new job and you are getting paid X amount of dollars per right now, and you maybe money's a little tight, but you know in a couple of years from now, you'll be making more money because you plan on moving up in the chain or whatever. Maybe you're an apprentice and you become, you move up and out of that job into another one. So then you'll be able to afford the $11.99. So that's another good reason for doing that. Now, one thing is important to know that it does not help you to qualify for a loan. So if you do this buy down and you choose this rate and it's going to be at $8.44 for the first year, you don't qualify for, you don't use that payment to help qualify for the loan. You still use the $11.99. Okay. Now there are some benefits for the seller. One, it's cheaper for the seller to do this than lower the price. They may have to lower the price by $25,000, $30,000 to lower the payment on something like this for you to be able to get a lower payment. So they just offer this so that you can get into that house for that lower payment. Builders, for example, they love this type of product because they don't want to lower the prices in their neighborhood. Maybe they've got a neighborhood that they've been selling out and all the prices last year were $150,000 higher than what they are now. And they don't want to lower them any further. So they may offer this type of program. And then finally, it makes it more attractive of a payment. So a lot of times what happens is the sellers or the realtors offer this right up front so that they may say, get a rate of 3.5% for the first year. So it attracts new buyers into their neighborhoods. Okay, well, we just covered that really quickly. I hope you enjoyed this video. Please leave a comment if you do have comments for me. Also, if you do like this, please like it. Hopefully I can afford and get some better pens with that. And hopefully we'll see you again on another video. Thanks for showing up today. Bye for now.